In the energy quadrant, crude oil futures finishes up almost 1.75%, getting up 2% near the highs, falling just short of $58 in the December WTI contract. That is a small breakout. Price has broken out of a very short-term 10-day range. Now that 10-day range was kind of consolidation that we saw that broke us out to the higher end of the longer range, really the range we've been in for most of the year, which is between $48 and $61. That $61 mark done more on the attacks on Saudi Aramco facilities and actual trade. If you were looking at the actual trade and took that out, the high of the move would be closer to $59 or $60. But we fell just short of 58 today, so we've been existing in that. But the little breakout that we got today was in that shorter term range. We now got a decided close above the 200-day moving average, and we've had that through these 10 days, but the 200-day is starting to tilt up, and that means it's more support than it is resistance. And again, we closed above it on the week. That's pretty critical from a technical standpoint. Price is definitely ignoring the warnings that we got from the OPEC meeting about falling demand. Trade optimism, part of the reason for the extended rally that we got on Friday. Larry Kudlow spoke very positively on trade in front of an audience today, saying that the background music of the negotiations was very pleasant and that they were getting very close to this phase one trade deal and some sort of announcement of a signing of it. So seems like the phase one trade deal, which was pretty much announced as a done deal, still had some details to work out, and Larry Kudlow seems very positive on it. He is one of the president's chief economic advisors, but he's also a very positive person. Crude oil took a cue from that and rallied a little bit more and then continued the rally when Baker Hughes rig counts came out, falling 11, fourth consecutive fall in the U.S. rig counts. We are now well below that 800 mark, which we basically existed in for about 18 months or so in that sort of 800 rig range. We're down in the mid 700s now. Rig counts continue to fall, fourth consecutive week, restraining supply. So even though OPEC says demand's going to fall, seems like U.S. supply is destined to fall as well. Hasn't happened in any large scale yet, but the rig counts say that it's coming. And we did get that refinery utilization number this week, and that also stayed below 90, in reinforcing that the short-term demand for gasoline seems weak as of right now.